This CPA Australia's live webinar is presented by Ian Taylor, Josephine Haste and Mark Morris. Moderating today's webinar, we also have Michelle Webb. So to start us off, I'm just going to welcome our presenters into the conversation, opening up your mic, everyone, and just handing it over to today's moderator, Michelle. Just hand it over to you, Michelle. Enjoy the webinar, everyone.
Thank you, Linda. And thank you everyone for attending. As Linda has said, we have Ian Taylor, Mark Morris and Josephine Haste presenting for us today. Ian Taylor commenced as Chair of the Tax Practitioners Board in 2013. He was previously a tax partner with KPMG and also ran his own practice as a registered tax agent. Ian is a Fellow of both CPA Australia and CANS and has been a committee member and chair of various committees for both professional bodies. Mark is the principal of Morris & Associates, a tax consultancy practice which specialises in providing tax solutions to small and medium-sized businesses and their advisors. Mark is also a quality reviewer for CPA Australia. Josephine is CPA Australia's policy advisor on ethics and professional standards. Josephine has worked for CPA Australia for more than 15 years and is also a member of both CPA and CANS. So how today's session is going to work, this is a follow-up from a webinar we ran earlier in the year on client verification and engagement. So you can see there some of the supporting resources that were made available after that event. So today what's going to happen is our experts are going to reprise the key messages from that webinar, and this will be on reasonable care, client verification and the use of engagement documentation. So after that, we will have a Q&A and roundtable discussion. So I'll now hand over to Ian to get us started.
Thanks, Michelle, and good afternoon or good morning to you, wherever you might be in the country. So as Chair of the TPB, I'm here today to try and help you better understand your obligations under the Tax Agent Services Act 2009, which we refer to as the TASER, and in particular, the Code of Professional Conduct, which is contained within that Act. And the items within the Act are identified there on the slide, which are particularly relevant to today's discussion, are Code Items 9 and Code Item 10 of the TASER, which require tax practitioners to take reasonable care in, firstly, ascertaining a client's state of affairs, and once you've done that, secondly, ensuring that the tax laws are correctly applied to the circumstances in relation to that particular client advice that you're given or giving. So the question arises, what does reasonable care mean in the context of these code items? And the standard of reasonable care required of you is that of a competent and reasonable person possessing the skills, qualifications and experience required to become a registered tax practitioner. So how do you take reasonable care? There is no set formula for determining what it means to take reasonable care in any given situation. You need to take into account a range of factors to ensure you comply with your reasonable care obligations under the Code. So some of the factors that you would need to take into account include, firstly, the terms of engagement between yourself and your client. You need to look at the complexity of the transaction or the advice that you're giving, the client's circumstances, including their level of sophistication, such as their level of knowledge and knowledge of the subject area, and the nature of any pre-existing relationship between you and your clients. So in that context, let me just say, obviously, if it's a brand new client, it's a very complex issue that you're dealing with, then you'll need to take a greater degree of reasonable care than you would if you're dealing with a relatively simple issue for an existing client. That's just the two extremes, I suppose, in terms of what reasonable care might mean. In particular, the TPB does make it very clear that in context of Code Item 9, you are not required to audit a client's state of affairs or audit a client's records, etc., etc. You don't need to audit or examine and review their books as such. However, what you need to do is to reasonably satisfy yourself that the information that they're presenting to you, and which you then present to the Commissioner of Taxation, is reasonably believable, credible, and something that could be relied on. So again, in that context, instead of actually conducting an audit, you just need to probe, you need to ask reasonable questions so that you can be satisfied that the information is reasonably believable. The TPB also takes the view that you cannot automatically discharge your responsibility to take reasonable care simply by taking on or believing what the client is actually telling you. So if the information that is supplied by the client doesn't seem credible or appears to be inconsistent with previous patterns or claims and statements made, then further inquiries are necessary. So I think that should assist you in the understanding of what reasonable care is. Another way to explain it is perhaps to suggest that if you've got a set of circumstances that you're dealing with in respect of a client, how you deal with it, if we gave those same set of circumstances to, let's say, 4 or 5 other practitioners, how would they deal with it as well? That's the test, if you like. So it's, in a sense, it's a peer group test. How would half a dozen other practitioners deal with those same sets of information? And if you were a standout in the sense that you were the only one dealing with a particular set of circumstances compared to your colleagues, your peers, then you might not be meeting the standard of reasonable care. So having attained reasonable care in the context of item 9, you then move to item 10, and that's reasonable, I guess, to say then once you've determined the circumstances, you've then just got to make sure that the law is correctly applied to the circumstances in which you're providing the advice and in the circumstances of the client which you've determined in the context of Code Item 9. So when we come to 10, again, there is no set formula as such for determining what reasonable care is to apply the tax law correctly. So what you need to do is to make sure that you refer to, obviously, the legislation, any related material, the case law, any rulings and determinations issued by the Commissioner of Taxation on the topic in question, any other guidance material published by the ATO, any other guidance material published by recognised professional associations, any other relevant training materials. All of these need to be taken into account to ensure that you correctly apply the tax law. Again, I think it's fair to say you do not need to be 100% correct 100% of the time. If you've got a reasonably arguable position, then that's generally sufficient to say that you have exercised your reasonable care requirements in applying the tax law correctly. Obviously, being 100% correct 100% of the time is a good way to go, and I'm sure your clients would appreciate that. But it's not necessary to satisfy your reasonable care requirements. So hopefully that gives you a bit of an idea. I'll just briefly turn now to the issues that might arise in these circumstances where you fail to meet your obligations under the reasonable care provisions. And I must say that the TPB does have on a regular basis practitioners who are referred to us, generally speaking by clients who are dissatisfied with the nature of the advice received. So they make a complaint to the TPB. Roughly 1,600 per annum, although I must say that in the first quarter of this year the number has been alarmingly increasing, which is not something we look forward to. But nevertheless, that's what it is, and we do get a large number of complaints. So when these complaints come in, the TPB must investigate them. The law requires us to investigate them, and we can take a number of actions in response to those complaints. The first thing we can do is we can issue a written caution, which is essentially a slap over the wrist, make sure it doesn't happen again. And if it does, then obviously the consequences will be greater. The second thing we do, often in conjunction with the written caution, is we issue an order that a person must take certain actions, and that could include things such as completing a course of education or training specified by the TPB, providing limited services or under the supervision of another agent, and in the worst cases, they could lead to either suspension of registration or termination of the registration. And obviously the severity of the sanction that is applied will depend on the nature of the circumstances of the case and and all of the decisions that TPB makes in this context, except the written caution, are subject to review, and they're subject to the review by the Administrative Appeals Tribunal. So let me just give you a quick case study in which the TPB did make a finding in relation to a company. So in January this year, the board rejected a registration renewal application, finding that the company's sole director was not a fit and proper person as a result of the company's breaches of the Code of Professional Conduct, including the reasonable care provisions. So the board found in this case that the company had breached subsections 30.10.9 and 30.10.10 in that it did not take reasonable care in ascertaining the affairs of 11 of its clients by failing to ensure that the income tax returns lodged on behalf of those clients contained accurate information. They failed to ask sufficient and pertinent questions regarding allowances and work-related expense deductions, and they failed to cite any necessary supporting documentation to substantiate those claims or deductions. The board also found that the company had breached section 30.10.10 in that it failed to take reasonable care to ensure the tax laws were applied correctly and in respect of the provision of advice to those 11 clients in the preparation of their tax returns, etc. And it did this by incorrectly applying eligibility requirements and criteria and substantiation rules relating to the claiming of deductions and allowances. So in making the findings, the board was concerned about the travel and other work-related expense deductions claimed by the company in the returns and the related advice it provided. Now, of course, you will realise that this is a pretty hot topical issue at the moment, with the ATO having reasonably recently released their paper in respect to what's referred to the tax gap for individuals not in business, and identified from that paper the fact that overclaiming of work-related expenses by registered tax practitioners is higher than the overclaiming by self-preparers. And one assumes that we as practitioners have a better understanding of the law than a person who is a self-preparer. So, as I say, it's a hot topic at the moment, and there's an example there where the board did in January of this year reject a renewal application for a company on that basis. So we'll take some questions a little bit further on.
Okay. Thanks, Michelle. Thank you, Ian. In terms of client verification, which is the topic I was going to cover, I guess very much in mind of conducting QA reviews, it's absolutely paramount that you verify client information so that you can prepare accurate compilation reports, tax returns and other advices. And echoing Ian's comments a bit, certainly if you look at 8.2.20, there's a paragraph in the accounting bylaw which relates to the provision of tax services, which in effect mimics the reasonable care requirement that Ian just referred to, in the sense that CPA Australia public practitioners must exercise due care in the provision of taxation services. And I suppose I'm thinking of two recent instances that come to mind that I've encountered in practice where there's been a failure to exercise due care in these circumstances. For example, someone gave advice on the run to the effect that the company who was a client could in fact satisfy the quantity of ownership test but didn't have regard to the same share rule. Again, it was a quick analysis but not really a thorough one, and essentially advice was given that tax losses could be recouped when in fact they couldn't be. More classic one I think is the CGT small business concessions. I had the good fortune of recently coming into CPA Australia for a review of various practice issues with other practitioners, and uniformly we all agreed that the small business CGT concessions are a minefield in terms of potentially getting it wrong. Classic case is that, of course, you have to include a connected entity in your eligibility tests, whether you're relying on the turnover test or the net market asset value test, and including every entity that you control more than 40%. One practitioner famously in my history only included 40% of the assets of those connected entities when, of course, you're required to include 100% of the assets of those connected entities. So getting information right and making inquiries is very important. In terms of the actual QA process, it's also important to think about APES 320 and the importance of ensuring you've got processes in place to verify the identity of new clients, e.g. by having client screening checklists and issuing ethical clearance letters, as well as their integrity. So obviously, care should always be taken, I think, before accepting a new client, particularly when the world revolves so much around email communications. You need to make sure that your gut instinct, as well as your research, indicates the type of client you should accept. Also, what we're also looking for in terms of QA files is to ensure that people have enough supporting documentation, whether it's a form of contracts or records, to substantiate the positions they take. Again, as we move to an era where more emphasis is put on consulting and advice work, you'll find it becomes increasingly necessary to look at source documentation like contracts. Indeed, when you're providing advice like that, you often, when you're compiling your advice, identify gaps or things that you need to clarify with your client. In saying that, I think one thing that we're also looking for in terms of reviews of files from a QA perspective is the completion of file notes. It's very easy, particularly on the Friday afternoon I talk about, for people to skip over and make judgments about not documenting discussions. Essentially, having those file notes is critical so that there's no misunderstanding about the factual basis on which advice is given. Another thing that we're looking for in terms of QA reviews is the completion of checklists, whether it be CPA Australia's checklist on, say, a variety of taxation topics, or one that is adapted from other checklists. There has to be, however, some documentation on file indicating that there is a monitoring of the service being provided, whether it be in tax or an accounting checklist. And one other thing we're looking for in QA reviews, and particularly QA framework manuals, is that there be monitoring processes included. I'd say that probably one area there which often is problematic for a lot of practitioners, particularly sole practitioners, is the failure to monitor the quality assurance manual. And that includes, as part of that monitoring process, having some client retention checklist. Going through your clients and making sure that with the benefit of hindsight, you should still be keeping them. And maybe even doing a monitoring report to test the efficacy of your own systems in terms of the clients you retain. What could go wrong in practice? I keep mentioning the famous Friday afternoons. I'm always careful on Friday afternoons. Giving advice on the run.
Just don't work.
Don't work. That's a good idea. And yeah, I haven't been able to mention that one yet, but on aspiration. But it is always that risk of giving advice on the run. If you're uncertain, stop. Make sure that you take breath and ensure that the advice you're giving is accurate. So avoid being put on the spot to give immediate advice, particularly given the complexity of the law as it's emerging. Secondly, where you've got a client promises to do better next year, always be careful. I remember once sending out a client a voluminous transmittal letter with about 10 pages of suggestions on how their accounts could be improved, how their record keeping could be improved, of various tax issues that they should address, in the vain hope that they would actually act on it. And of course, when I got there next year, it was actually worse. So just make sure that there's probably a degree of rigour that's applied in terms of your communications and follow-up. Beware of scenarios where the client's story changes. I remember having a client many years ago whose story would invariably change every time I met him. I almost wondered whether it was a game. Where you've got a client like that, building on from Ian's point, exercise caution, document the discussions. You may have to exercise more care with someone like that than obviously a client you've known for a long time who you believe is very credible. And I guess the classic one is avoid a client's pressure to just get the outcome they want when in fact it could create difficulties for you. At the end of the day, as we've got, as you note in APES 220, it's often necessary to walk away from a client if they don't want to hear the answer you're giving. I remember recently dealing with a property development where the client had a mindset that it was all going to be on capital account, when in fact, when you looked at the factual background, he had a significant history in property development and there was a risk that the profit would be on revenue account. He didn't like it, and I walked away. So where's the emphasis of the tax office in 2018? I think Ian hit it on the head before. There's a massive emphasis on work-related deductions. Indeed, I think for the very first time the ATO reporting that work-related deductions are decreasing in amount. And part of that is because the ATO is contacting agents in real time to identify any errors, particularly in respect of overclaimed deductions. So really the emphasis is on agents to ensure that they not only have a technical basis for the claims they're making, but those claims can in fact be substantiated. And it would be very prudent to use to ensure you get your client to recognise and that you have gone through that process with them, and to get them to substantiate the existence of work-related documentation, invoices and receipts, etc. You can get a standard client substantiation declaration, incidentally, from the CPA Australia public practice website. And if you've got any queries, again, it comes back to Ian's point about exercising due care, really make inquiries. As Ian pointed out, I don't think anyone's expecting 100% audit, but at the same point, if in doubt, you must clarify the situation with your client. So in terms of your quality control risk management framework manuals, it's really important that they have embedded in them, particularly the quality assurance manual, processes regarding client verification on acceptance and continuance of engagements, and also have it embedded in your risk management framework to identify risks and the type of work perhaps not to take. Okay.
Hi everyone. Thanks very much, Mark, for your insightful comments there, and also to you, Ian. I want to tap off the conversation today with talking about your requirements under the standard, which is APES 305. But more importantly, what I wanted to do, rather than go into the details of the standard, was to talk about something that has changed the requirements of this standard. And that's the introduction of NoPar, which is non-conformance with laws and regulations. Now, NoPar was introduced to the code, which is APES 110, in January of this year, and the detail of NoPar can be found under section 225 of the code. What NoPar does is it changes or shifts the principle of confidentiality, of client confidentiality. So where accountants would hang their hat on the concept of confidentiality, NoPar actually lifts that on certain conditions and in certain circumstances. So this is why it is incredibly important that your engagement letter and your engagement documentation highlights these changes to the code, which as members you are obliged to abide by, and your clients understand what that means for them and what that means for you. So rather than just having a standard on APES 305, which you must abide by and which you must ensure that you have engagement documentation, this adds another level of complexity and another level of detail to that engagement document. Now, I've said many times during these sessions that if I was in public practice still, my engagement letter would be War and Peace, because it is the document that does protect you and protect your practice. Make sure that it's very clear what your obligations are, what your client's obligations are, and what the scope of work is that's going to be done. Quite often when I get phone calls from colleagues in the legal profession and they have questions in regards to a dispute between a client and a practitioner, it always comes down to the engagement letter. It always comes down to what was in that engagement letter. So not only is it important from a business perspective in terms of managing your legal obligations or your risk with respect to compliance, it is also very, very important in terms of managing your obligations under the code. Now, as you would know, if you don't meet your obligations under the code, that just won't get you in trouble with Ian. or the Tax Practitioners Board, that will also get you in trouble potentially with your professional body via their professional conduct business unit. So once again, this changes the mindset and the thought process around terms of engagement. So just to give you a little bit of an update as to where we find most breaches through the Quality Review Program, breaches of APES 305 was the third highest non-audit breach identified under the Quality Review Program in 2017. Obviously, we don't have the stats for this year, we haven't finalised that. However, we always see that 305 is quite high on the list, and that's because if our members do have engagement documentation in place, it might be quite old or out of date. So whenever the scope of the services that you're providing changes, that engagement letter really should change too, for the reasons that I've discussed earlier, to provide you with that protection. That means if your client is a family business and all of a sudden one of the kids have grown up and you're doing their tax return, or you're setting up another trust, or there's another particular entity that is being developed or embarked on by that client, any time where there's a change, that must be embedded into that engagement letter. Now, I often get questions, well, do I need to update it every year? Well, no, you don't. If the scope of work that you are doing has not changed, then no, you don't have to update it every year. Should you review it every year? Absolutely. You should make sure when you're about to do that work on that client file that you're not doing anything else that's not there. One of the tricks we find, and one of the traps that our practitioners fall into quite often, is company secretarial services. Quite often a practitioner may not understand that they're actually providing company secretarial services, even if they're just the registered mailing house for their client's companies. That is actually a company secretarial service, and the engagement letter doesn't refer to that service that they're offering that client. So be particularly careful when it comes to company secretarial services that you may be offering and may not realise that you're offering. Also too, it's a way of ensuring that you and your clients are keeping a track of services which are growing over time to ensure that you're pricing yourselves correctly as well. You're pricing the work that you're doing correctly. It's quite easy for services to creep over time and for that to not be reflected in what you're charging your clients for your time and your services and your expertise. So just keep those things in mind when it comes to engagement documentation. Now, we have briefly touched on your professional obligations and what the terms of engagement look like. So in terms of how you should structure your engagement documentation, it doesn't have to be a letter. However, it needs to be in a written format. So that can be a letter, it could be a brochure for your iReturn clients, it could be an email, it could be anything that's documented that the client has acknowledged that they've received. Now, that brings the next question, does a client have to sign their engagement documentation? The simple answer to that is no, they don't, unless it's an audit engagement. However, for all other engagements, no, they don't. However, we always say that best practice would suggest that you get some sort of evidence that the client has received the document and that they have acknowledged the terms and conditions contained therein. The best way to do that is either via a return email from your client that you can staple and put on the file to the engagement letter, or that they sign it, that they initial it. So one of the things that we suggest is when your clients are signing their iReturn documents before they lodge them, just get them to quickly sign the engagement brochure as well. It ensures you're protected and ensures the client has acknowledged what their obligations are, which is really, really important for iReturns, because a lot of individuals don't necessarily understand that they are still ultimately responsible for the information that they're providing to the Tax Commissioner. And it's important that they are reminded of that through that engagement documentation. We might just move through now to your professional standards obligations. The CPA Australia, in accordance with its bylaws, conducts periodic quality reviews, as Mark touched on earlier. Depending on your review and frequency of your review will depend on the outcome of your last review, and it depends on the services that you're providing and your professional registrations as well. However, regardless of any of that, we will always look at your compliance with APES 305 via the General Quality Control Questionnaire. And through that, we ensure that not only are you meeting what's minimally required from the standard, but also too that your files are reflecting what's in that engagement documentation. Hence why it can be our most common breached standard when we do a quality review. Your reviewer, and in some cases Mark, will be looking to see that there is documentary evidence to support the engagement performed. So we're looking at that file to ensure that it's marrying up with that engagement letter. Supporting documentation can include anything such as checklists, file notes, copies of relevant documents, and of course, what should always be there is that engagement documentation. To help you prepare your engagement documentation, CPA Australia has produced a number of resources. The client engagement section of the toolkit includes a non-audit engagement letter checklist, a sample engagement letter and sample engagement brochure. Now this has been updated to include a standard paragraph for you to reflect the requirements of NoPar. So it would be very prudent of you all now that NoPar is in force, that all of your engagement documentation be updated at some point this year, because it is very, very important that your clients now understand that all of the information that they give to you might not necessarily be sacrosanct, depending on the practitioner's obligations under NoPar. Of course, we always say to you that while our documentation is regularly updated and we do our best to ensure that it provides guidance and meets the standard, it never replaces your own reading of the standard. So you could go to the APSB website at apsb.org.au to access the latest version of 8305 Terms of Engagement. It is a very, very short and easy document to read. I would highly recommend that you do that when you are going through that process of updating your engagement letter and also to updating your quality control manual and risk management framework to ensure that your engagement letter and its updates are reflected in that documentation. Because there really should be a process in that 8325 and 320 documentation where you are conducting those annual reviews and updates. Thanks, Michelle.
Thank you, Jo. I'm just going to move forward to some of the polling questions that we have, which will recap the information that we've started with today. So, Linda, if you could please open the first poll. What steps do you take when a client wishes to claim work-related deductions? Do you explain when amounts can be claimed, cite invoices and receipts, complete a file note or checklist, or all of the above? When you've selected your choice, if you could remember to click Submit. And you've got about 30 seconds left to answer that.
Okay, we've got about 10 seconds left of this poll. Everybody currently sitting in progress, make sure you do hit that submit button so we can close this off and your response will also be in the results. Okay, just letting you guys know that we've just missed out on that. If anybody's sitting in progress at the time that the poll concludes, it just means there's a bit of a delay in bringing up the results. I'll display that in about 8 seconds for you all.
Okay, so 75% of you said all of the above. I noticed 1 or 2 people said they would respond A and C, and so 9% have just said A. Would anyone like to make a comment on this?
Yeah, I'm happy to. Look, I think that's a great outcome, 75% suggesting all of the above. And I think there is, I guess, a degree there in terms of Part B, of it. In other words, if you're citing invoices and receipts, as I mentioned before, you're not required to do an audit. Therefore, from that perspective, I guess I would qualify that by saying if you cite some invoices and receipts, then that's appropriate. I always give an example. Let's say you've got a client, one of my clients says that they've spent $18,000 on donations to charities in the last year. If that client had only earned income of $80,000, I'd be asking a lot more questions than if the client earned $1 million. But even so, I would probably still be asking the questions. You've spent $18,000 on donations, I want to see the receipts for the top 10, and if the top 10 receipts equal 90% of the total claim, then I'm probably satisfied on the remaining 10%. So it's a matter of relativity. Again, depends on the circumstance of the client, but look, I think all of the above. So you explain to the client what they're entitled to, you cite appropriate invoices, samples, etc. You complete a file note checklist. I think you've done all that. You've exercised reasonable care from the TPB's perspective.
Thank you, Ian. Mark, did you have anything?
Not much to add to Ian's point, other than I think the more analysis that is done, the better. It's hard to get 100% of information 100% of the time, as Ian mentioned, but clearly there is particularly low work like I-returns as people actually churn them out. But you've got to make sure that there is the claims can be substantiated through invoices and receipts and logbooks if appropriate, and where there are issues, ask queries and have some documentation. Particularly, as Ian pointed out, when the more material expenses that are being claimed, the more the need to get information.
Jo, did you have anything to add to this one?
Yes, probably more around what you could do in your quality control manual and risk management framework in respect to this. There won't be a one-size-fits-all approach, so it'll be very, very difficult to write a policy and a process with regards to this. But it'd be more from a philosophical perspective. So what is your approach when it comes to verification of documentation? And then how do you ensure that it is at the front of your mind or your staff's mind when they are producing that work? So it's more about documenting what your overall strategy or philosophy is for that, and then ensuring that that's at the front of mind, because there won't be able to be a one policy or a one process that will fit every single type of return that you'll do.
Thank you, Jo. All right, so Linda, we'll move on to the next polling question, if you could pop that one up. So, do you provide an engagement document to all of your taxation clients, including income return clients, yes or no? So again, remember to click Submit once you've made your response. And you have about 30 seconds to now fill that in.
Okay, that poll has also closed. It's just telling up those results, and we'll get that back up for you in a moment.
Okay, so we have mostly done our job today with 82% saying yes, but the 13% who said no. Jo, would you like to respond to that?
Absolutely. My guess would be that potentially that 13% is made up of practitioners who are not providing an engagement document for their iReturn clients. So just to re-emphasise, it is really, really important that regardless of the size of the client's work that you're producing, it doesn't matter if it's a really small return or it is a taxpayer that is earning millions. It does not matter. An engagement document is required regardless of the size. So it doesn't have to be a letter, but it does need to be some sort of written document, either in the form of a brochure that can be worded exactly the same for all of a particular type of client, or it needs to be in some sort of written format. It could be something that you attach to an email that you ask them to return to you. They acknowledge via return email. It can be done electronically. It doesn't have to be a printout as such. So therefore, it can be very, very cost effective to do it electronically, but just that reminder that it is imperative that you do it for every client regardless of their size. Otherwise, it will be a breach of APES 305, and potentially that would mean that we would find that at the time of your quality review.
Darren's just made a comment in the chat box. He said the 13% are the honest answers. People get busy, especially with smaller iReturns.
Well, I've got a comment on that. because everyone who's a CPA Australia public practitioner will at some point get a QA review. And the way I always suggest people approach QA reviews is very much on the basis of minimising risk. So engagement letters are really a critical tool of minimising risk and misunderstanding with clients. So yes, you could understand people are time poor. I don't know anyone of our game who isn't, but it is kind of essential to quarantine yourself in that way. And as Ian will talk about reasonable care in the TASA context, I'll talk about due care in the APES 220 context. One way you can kind of quarantine risk is to scope your engagement very carefully and the extent to which you have to exercise reasonable due care.
So if I can just comment from the TPP perspective, I mean, whilst it's mandated for CPA practicing certificate, etc., it's not mandated for the engagement letter is not mandated for TPB. However, TPB absolutely strongly recommends that people have engagement letters engagement documentation for all of their clients. But this 82% is as high as I've seen it in terms of a general population. Obviously, we'd expect it would have been closer to 100% here. However, the other thing I'll just add here is that, and I mentioned before, TPB does get a lot of complaints each year which we need to investigate. One of the first things we do when we get a complaint from a client is we ask the client for a copy of the engagement letter. And more than 9 times out of 10, there is no engagement letter, right, or no engagement documentation. So what does that tell you? It tells you that because of a lack of documentation, I guess, there's a greater risk of getting into a dispute with the client, because the engagement documentation sets out your responsibilities, their responsibilities, how you're going to charge, all of those things, which minimises the likelihood of a dispute with the client. And as I say, the evidence we see clearly verifies those circumstances.
Michelle, could I just add to that as well, to come back to that particular question? With respect to this particular standard, one of the things that may not be at the front of your mind is that your compliance with these standards also affects our success in obtaining our professional standards scheme renewal that we have to go through as a process. So one of the things that the Professional Standards Council looks at is our members' compliance with these mandatory standards, which are there to reduce risk. If we can reduce risk, then we can access reduced liability. We can access those privileges, but we can't access those privileges if we can't prove to the Professional Standards Council, which is a government organisation, that we do what we say we're doing. And we say that we're providing engagement letters to all of our clients, our public practitioners are doing that, and we say that. So that's why it's critically important in the quality review program that we are checking off on that. And it is a really, really important obligation that you as members need to ensure that you're abiding by. Because if that was to be something that was going to be looked into from a professional standards scheme perspective, then that could potentially raise some serious issues for us in obtaining access to that scheme going forward. So, as we know, the scheme access is really important to all of our members and all our members in public practice. Therefore, we need to work together to ensure that that is still available for us.
Thank you, Jo. So Adam has asked a related question. So does an individual return client who emails asking or requesting if we can prepare their return constitute engagement, or does it have to be initiated by us? So I'll read that out again. Does an individual return client, tax return client, who emails us asking if we can prepare their tax return, does that constitute engagement?
Well, in my view, that would constitute them inquiring about additional services, or if it is the only service. Therefore, what you would do in response to that is say yes, if you are willing to take on that particular engagement. You would say, yes, we are prepared to take on that engagement for you. Please find attached our engagement documentation.
Which could be in the case of our returns a brochure, couldn't it?
Absolutely. And then you would ask them...
Ian's point, the client's responsibilities and the practitioners.
Yeah, and then you would say, please confirm your acceptance via return email, and we can make an appointment for you to bring in all your documentation and start your returns. That's how I would handle that query.
Ian, did you have anything to add?
No specific comment other than fundamental of contract law, offer and acceptance.
Yes, absolutely.
All right, the next polling question, please, Linda. So this one is, were you aware that an engagement document doesn't have to be in a letter format? Simple yes or no, and remember to click submit. So you have 35 seconds to respond to that one.
Okay, about 5 seconds left. The two people sitting in progress at the moment, make sure you hit that submit button. Okay. Fortunately, we've just missed the cut as well, but I'll display those results in about 15 seconds for you all.
Okay, so 72% said yes and 22% said no. We have talked about this a lot throughout the webinar, but did any of you want to make a brief comment about that before we move on?
Well, it is codified in APES 220 that you can issue a brochure. So APES 220 is not an enormously lengthy standard, so if you're in any doubt about what's required, have regard to it.
That might be one of the issues that is perhaps getting in the way of members feeling that they can issue an engagement document, because I think it's going to be time-consuming, it has to be an individualised letter.
Or it might be 5 pages long.
That's right. That's right. So I hope that clears it up, that essentially it can be very much a standardised document for a particular group of clients. So if you've got standard I-return clients for wage and salary earners, let's say, then it's very likely you could issue the one document for that particular group of clients.
Thank you. So before we move on to the last polling question, I'm just going to deal with some of the questions that did come through previously relating to engagement letters. So Nat asked, in relation to engagement letters and cloud accounting, apparently we need to advise clients that their data is stored in the cloud. The current engagement document template on the CPA and TPB website doesn't include this. Do you have any wording on this? Well, just to clarify that, Nat, the CPA Australia engagement letter does have a clause on the storage of personal information, which encompasses cloud computing. Ian, can you respond on the TPB one?
Look, I think the answer is we don't have any specific wording, but we did put out the document which was in relation to cloud computing. I think probably the start of last year, January last year, I think we put it out. So that document is a couple of pages long. It tells you what's required in terms of advising your clients, and it's a matter of wording it from there, I guess, but we don't have any specific wording because each practice is different and the nature of what they do and how they do it is different as well. But there is general guidance and guidelines there on our website.
And our clause on storage of personal information is also generic and is designed for you to customise as you see fit for your practice. Mark, did you have anything further to add on that?
Not particularly, Michelle, no.
Okay. So Greg asks, at the Belmore Open Forum, Ian detailed what he included in his engagement letters, client agreement, etc. Could he please mention these again, as I feel it would be helpful?
Okay, well, thanks, Greg. You attended the Belmore ATO Open Forum. Thanks for that. I'm doing another one tomorrow, actually, in Gladstone, in Queensland. So that'll be interesting, but I do get around. Look, I did mention in my engagement letter I do ask clients to sign. However, I give them the option effectively of saying, you know, sign and return as acknowledgement that you agree with the terms and conditions set out. However, if there is anything specific within the document that you don't agree with, please raise that with me. And in the event of you not raising the issues, then it's assumed that you're giving approval to go ahead on that basis. So that's still consistent with the position that it doesn't have to be signed, but you do want to get from your client an understanding that they know what's in it, and that they've acknowledged, at least some way acknowledged it. So that's the option I give clients, set it out in the letter itself.
Thank you. There's a question from Patrick. If you are aware that your client hasn't paid super, for example, what is the most correct course of action in terms of reasonable care, especially when we have obligations under NoPar to disclose certain things but also have obligations of privacy? What is the most correct course of action?
Well, I would say from a TPB perspective that what we would want in this context is that obviously you as the practitioner need to satisfy that you are applying the tax laws correctly in the context of the client affairs. So again, it comes back to your engagement with the client, what your requirement is or what you're required to do for that client, assuming that you're lodging documents on behalf of the client. Then the position would be that you should make your client aware of their obligations if they're not already aware. Make them aware of the fact that they're not complying with their obligations, and inquire as to what they intend to do to remedy that situation. If they persist in not complying with or dealing with the issue in an appropriate way, then I would suggest to you that you put it to the client that you no longer wish to act for them and terminate your engagement with them. Now, one thing I will say, however, is that one would hope that in the current climate, with the introduction of single-touch payroll, which we know has been now operating for larger entities since July of this year, that single-touch payroll will be reporting on a much more frequent basis to the ATO what those obligations for superannuation are. But of course, the reporting of it is not the same as the payment of it. But we do also know that as a result of the single-touch payroll environment, that the ATO will be in a better position to follow up on the payment of amounts which are notified to them on an ongoing basis. So I think look to an improvement in compliance with superannuation requirements, but we know there will always be those that will try and push the system to the limit and not comply. So my view is keep impressing on the client what the obligations are, and if they ultimately continue to refuse, then walk away.
Which is also reflected in APS 220, which specifically deals with the provision of taxation services and that type of scenario. So, you know, obviously it might be circumstances where the client may just not be aware of their responsibilities, and obviously you can alert them to those. But if you have a situation where, in essence, they're not being compliant with the law, then you need to go through that process, and if necessary, there's an indicator withdrawal from the engagement. It also highlights the need to review the client list. If you remember, we talked about earlier about, as part of the QA manual, having a client retention process. It may often appear in practice after you've had a client for a while, maybe they're not the client to keep. And going through that process is important. That's why monitoring of the manuals is paramount, so that you do review integrity of clients periodically.
It's a very interesting question, actually, because there are obligations now under NoPar with respect to this situation. So it's not just simply, while I agree completely with what Ian and Mark have said, withdrawing from the engagement may actually not extinguish your requirements under NoPar. So if you have instructed the client as to what they're supposed to do, and you've given them a time frame in which you want to see rectification of the issue, and they still don't rectify the issue, then you potentially have obligations to report the issue to the ATO under NoPar. So just simply withdrawing from the engagement, unfortunately, is in some cases not appropriate anymore.
Particularly if there's a material impact on the financial account.
Absolutely. So we couldn't give you a blanket explanation there as to what you should do in all circumstances. You would have to look at that particular circumstance of that client, and then you would have to look at your obligations under Section 225 of APS 110, which is the NoPar section, and you would need to make a determination as to what to do. But it is still, the practitioner still can make the decision under NoPar to report a non-compliance with laws or regulations, even if they have discussed it first and foremost with the client or those charged with governance. That's the first course of action. But that still doesn't mean that the practitioner doesn't have to report that. They can make a decision to do that.
Okay.
So just on a point there, one of the things we're still waiting on is the whistleblower legislation. At the moment, as I understand it, still hasn't been passed. It's been sitting in Parliament now for some time, I think January this year, and it hasn't yet been passed. But when it is passed, it will give practitioners, specifically mentioning registered tax and BAS agents, and give them immunity from any prosecution in respect of breach of our requirements. So clearly, our requirement, yeah, exactly. So our requirement in relation to confidentiality is clearly you cannot disclose information in relation to a client to a third party without the client permission. Now, so you hardly, in those circumstances, the client's not complying with the law. You tell them you no longer wish to act for them, but by the way, please give me permission for me to dob you into the ATO. Hardly going to get permission from the client. So if I then pass that information to the ATO, I am technically in breach of the TPB's TASER legislation, but the whistleblower legislation, when it comes in, will overcome that problem. In the meantime, the TPB is taking, if you like, a soft touch approach. In other words, it's highly unlikely that we would cause a sanction to be put on a member, or sorry, a registered practitioner who did provide that information and would be nevertheless in breach of the confidentiality requirement. But that's an interesting interchange between the two requirements of the NoPar and the whistleblower legislation.
It is, because there's no absolute that you shouldn't report.
But it's funny with money laundering, different situation, because obviously there'd be a legal duty to report, and you've got NoPar as well.
Yep. That's right.
Oh, interesting. Okay, thank you. So look, we're going to leave this last polling question. We did provide the response to that earlier during the webinar. In the last minute or so that we've got, I just thought we'd have one key message from you all. So, Josephine, would you like to start?
Yeah, my key message today would be to not undervalue the importance of your engagement documentation, that it really is a letter that you really want on your file if things don't go the way you intend them to go. So it's one of those things like an insurance policy. You hope you never have to call on it, but if you do, you're very glad that it's there. So from all of the correspondence I have with those either in our profession or in the legal profession, it is the most important piece of documentation that explains the relationship between you and your client. And just make sure that your client is now fully aware of your obligations under NoPar. So that would be my key takeout.
Thank you. Just before I go to Mark, there's a follow-up question from Greg. So would that be the same reporting for GST and FBT fraud?
Well, unless there's a duty to disclose, legal duty to disclose, you've got to keep the client's information confidential.
Absolutely, yep. No difference.
So that would be the answer.
Yep. Okay. So, Mark,
I'm going to have two messages.
Okay, you may have two.
The first one is with engagement letters. We've talked a lot about them. I sense a lot of, when I do QA reviews, a lot of people see them as a real hassle. I'd suggest seeing them as a shield against, attack from any client where there's a misunderstanding on the scope of the engagement. So see it as a risk mitigation strategy, customise it, automate it, get it done as efficiently as you can, but it's there to kind of protect you. And the second one is, I think, verifying client information and having procedures in your manuals allowing you to do that is really important. Whether you've got client screening manual checklists, you've got practices of issuing ethical clearance letters, you've got processes in place regarding the compilation of reports, etc. Have that documented so that there's, again, no dispute with the client later on.
Thank you, Mark. Ian.
Okay, well, look, I'd have a simple message, I guess, and that is don't put yourself at risk. Don't put yourself at risk of losing your TPB registration because that is your lifeline. It is your livelihood. Don't put yourself at risk by bending, if you like, to client wishes. Push back on clients, and whilst it might seem a difficult decision to turn a client away because we're all out there to increase our fee level, etc., it's a difficult decision to turn a client away because either they're not complying with the law or they're trying to put one over you or whatever it is. Ultimately, if you concede to their wishes, you do put yourself at risk, and it's just not worth it in the long run.
Thank you, Ian. So thanks to all of our presenters today. Thank you all for attending. We hope you found this beneficial. If you have suggestions for other webinars and live chats that you would like us to provide next year, please email livechats@cpaaustralia.com.au, or for any help with all of our complimentary events, please don't hesitate to contact us. But now I'll hand back to Linda to close the session.
Thank you very much, Michelle, and a special thanks to Ian, Mark and Josephine as well for a fantastically detailed and informative webinar. Special thanks to everyone for your participation today as well as for your attendance. It was really great to see so much participation in those poll questions as well as the questions in the chat box as well. Now, that does officially conclude today's webinar. To exit, please click on that cross on the top right of your screen, letting you know upon exiting, everybody will be automatically redirected to a feedback form. Now, the feedback form only takes about 30 seconds to complete. However, feedback's really beneficial for CPA Australia as well as our panel, so please leave us your thoughts. Just finally, just letting you all know that you will receive an email within 24 hours with a link to today's recording, so please keep an eye out for that as well. Okay, well, thank you very much, everyone, and I hope everyone enjoys the rest of their day. Thanks, everyone.